Good morning, traders, and welcome to the morning update on Wednesday, the 8th of June. My name is Mark Owen, and we're going to have a look at some opportunities that might be presenting themselves either today or later on this week. Obviously, last week was a crazy week. The non-farm payroll numbers that came in were unbelievably low. It has ruined a little bit of our, let's say, bullishness on the dollar, and we're expecting a bit more direction. However, that's been negated now, and I think we have to trade with care again. I mean, you probably think I've been saying this for most of this year so far, but really, right now, the direction we were looking for with the potential rate hikes coming from the US, they look like they've been potentially delayed because of the bad data that's come out, and we are data dependent now in the US. It's not reliant on the emerging markets, so we've got to keep seeing what data comes out, and if it is good data, then obviously July at the very earliest, maybe September, who knows? Mrs. Yellen, when she spoke on Monday night, didn't actually give us a specific date for a hike, although she was relatively hawkish, but commenting that it is down to data. So let's have a look at what news we've got coming out today. So we've got British manufacturing production. We've got that at 9:30. Looks to be forecast is a little bit below on previous expectation of zero point 0.0, as previous one was zero point 0.1. Then at 3:30 we've got the crude oil inventories. We're expecting a reduction there. And then the major news for me today will be from New Zealand, the official cash rate. This is forecasted to stay the same at 2.25. Well, let's see. Will they stay the same, or will it take a reduction? Obviously, the Aussies kept their rate held at 1.75. However, they did have a rate cut in the prior month. Would I expect Kiwi to follow suit, i.e., do we expect a cut from them? Well, if we look at the Aussie-Kiwi chart, then Kiwi strengthened massively against the Australian dollar, taking it back down towards the 105 lows. So the question is, will we expect something from the Kiwis to counteract the strength of the Kiwi dollar there? Potentially, I think we may see a cut. If we do, it'll be a 25 basis points one. So we're going to have a look at the Kiwi chart shortly. Okay, so what's happened in the Nikkei? Well, when we spoke to you last week and we saw that the Nikkei was testing the top of this triangle, we did say to those that wanted to trade this range, they could quite easily trade the top of the triangle and trade it back down to the bottom, which it did, and it did very successfully. Now it's hit the bottom of the triangle and it's rebounding and it's coming somewhere back up to the top of the triangle. Last night's candle was a gap up, pushed down to close the gap, and then we've got a shaven head close, so a bullish close on here. We look at the last couple of days, there's been a small gap up, close the gap, and then bullish finish. Gap up, close the gap, bullish finish. So we're going to see, no doubt, a test of the upside of this triangle. The question is what to do next. So because we're getting right into the apex of this triangle, what you have to be is very, very careful. My eyes, it's not worth trading. Okay, wait for it to give you the direction. Wait for it to break out. Trade. If we see now that the market breaks out to the upside, then we'll be looking for a pullback and test of some sort of structure. So if it breaks to the downside, then we'll be looking for a retest of some sort of structure. But we want to see a solid breakout and close above, or breakout and close below before we trade any sort of retest. So don't get sucked into this market now. When we had the distance on the triangle, there was plenty of room to trade, but here there's literally no room to trade. If you're going to trade, it's going to be a very, very small time frame, looking for bullish moves, buying any pullbacks. So the dollar index, well, we can see the huge candle here. This was the non-farm payroll day. Huge sell-off in the dollar across the board. But since then, it's not really moved. Yeah, look at the candle. Sellers tried to force it down, finish it indecisive. Then again here in the inside candle. Today we've slightly broken the lows, but is this going to be a fake out to the downside? So we could see maybe a potential rally back up into the middle of this range, but let's trade with caution, trade with care. If you are looking to trade on the dollar bull side, then any sort of look to trade the fake out maybe, or go in very small risk somewhere around these levels to look for correlating majors and minors that are at support or resistance, and look to trade that in conjunction with the dollar bulls. If you are, however, bearish the dollar index, then the best way to be trading this is wait for a break and close below sort of 93.50 area, and then look to trade that back on the retest further down. Now you might find that this area 92, if this is going to break, the dollar index is going to come back down to 92, and that should provide us with some nice areas on the majors and minors to potentially get long the dollar again in months to come or weeks to come, should we get more good data out of the US. So all's not lost with the bulls for the dollar. I think it's just more of a little setback right now, and this is where we're probably going to have to trade more technically, and sit on the sidelines a little bit, wait for our key technical setups before we can actually start trading this market aggressively. So we're looking at the Kiwi dollar now. This is a weekly chart. I've encompassed quite a bit of data in here. So we're going back to the 2015 highs back through here, and we've got 2016 highs marked out here. Price is currently in this trap right now. You can see the move came up. It was a relatively decent move. It was a straight line on the weekly chart with very small pullbacks. Nice little channel formed. But then we got what we were expecting, which was a breakout and a pullback. But then obviously the numbers we were expecting out of the US, we weren't expecting the 38,000. And it's come straight back up into this zone, and the 50 fib at roughly 69.88, 69.85. So the question is, what are we expecting from the Kiwi? Are we expecting a rate cut, or are they going to hold rates the same? I think if we see rates held, then what we'll see is probably actually a close above this level, and we'll probably see the Kiwi push on a bit for the next few weeks. If we see a rate cut, then we'll get a nice reaction from this level. So it'll be a question of how aggressively or how conservative you want to trade this market. Remember, stay disciplined and stick to your rules. Next market, we're looking at dollar CAD, and the reason for dollar CAD is obviously we've got oil inventories out later today, and we know that affects the Canadian dollar the most. So when we look at this chart, there's a clear sort of neckline I can see drawn in from low here and this low here. And the market definitely looks like it's heading back towards this sort of zone. So intraday basis, up until 3:30, sell signals in and around the 126, 125.50 area. That should be fine. But then at 125.50 to 126, you want to be cautious, because we might get a spike down into here before it rebounds, or we might just completely break through this area. And if we do, then we've got a nice market to be trading here for Canadian strength. But what I will say to you, those that are on Protégé and those that have worked with me with Commitment of Traders, we know where the commercials are stood on the Canadian dollar. So I think any dips here on dollar CAD should give us an opportunity to potentially get into this long. So this 125.50 area is a great area for me. I'll be looking for price action in and around this zone to potentially get long dollar CAD. And then we'll look to run that up and around the 130s, 134s, second target. Okay, so just to follow up on CAD, we've got crude oil. Well, you can see the area we're highlighting, $52 in and around this zone here. So we're looking at this high here. Okay, this is the top of our range. If this high gets broken, we'll see a push up towards $60, I would have thought. So critical area right now. If we get a push through here, obviously then what we'll see is we'll probably start to see some of the US shale fracking companies coming back, opening up the rigs and starting again, getting oil producing over in the US. So it'll be interesting to see what happens because we've got a seasonal period for demand in oil. So will the Saudis continue? Will the Saudis look at producing more to keep market share? What actually came out of OPEC? Well, there was no agreement, so we'll see over the next week or two what's going to happen, and probably today we might have an inkling of whether there's been any further production hikes from any of the oil producers. Okay, so that's it from the morning update today. But for those of you that aren't aware, we've got a live trading morning on June the 15th, or I should say trading afternoon. This is for beginner traders and advanced traders. You're more than welcome to join us, and it's just a reason to meet the traders at Phoenix Blue. If you'd be interested in joining us here in London on June the 15th, it's from 1 p.m. till 5 p.m. All you have to do is click on the website www.phoenixblue.co.uk, register on the event section. Once you've got confirmation email, that's your seat reserved. If you don't get confirmation email, then that means all seats have now been reserved. If you've got any questions about today's material or today's analysis, please either drop an email to info@phoenixblue.co.uk or leave some questions on the YouTube channel. Yeah, we'll be happy to answer any of your questions on YouTube. If you've got traders out there that are looking for maybe a little bit of encouragement each morning, guide them to our channel, please. We'll be more than happy to accommodate more traders, more questions. Please keep them coming. All right, guys, listen, have a great day, stay disciplined, and we'll speak soon.